Hey guys, welcome back to Smart Trader. This is Paul, and thank you so much for all your likes, comment, share, and subscribe to my channel. If you are a new viewer, definitely go to our channel, watch all these videos, and if you're liking it, then hit the subscribe button to be a part of this big family. For the ones who want additional services, always WhatsApp 7892652481. Only WhatsApp is available as of now, so you can WhatsApp. For the ones who wants to be part of my secret Telegram channel, you can click the link in video description or else in the about section and open your account in Angel Broking or Upstox or Zerodha. So Angel Broking is free as of now. Upstox and Zerodha you have to pay for account opening for them. So without wasting time, let's start off with today's topic. So today's topic is about the rollover. Okay, so rollover in futures trading or rolling over, whatever you call it. So I'll just talk about this concept for the beginners who don't know about this particular concept, which is available in futures trading. So most of us would have seen futures trading, and we have learned a little bit of futures trading, right? So now before watching this video, just go and watch this video. Yesterday I just posted right around 8 o'clock this particular video. You can just go and watch about margin trading. So I told in this video how you can take margin on equity, and also at the end I spoke about futures. So you get futures lot, you can pay money. So now for example, today if you see, I exited a position in Ambuja Cements May future. So if you see the orders, I just have a single order, right? So at 10.5 I just sold Ambuja Cement 2500. There is one lot, that is at 169.3, and there is no buy order. Okay, so overall there is no buy order, just a single sell order. So my position is already closed. Now why is this? Because yesterday when Ambuja Cement was trading around 165.30, I just took this trade as a buy. Okay, now considering this is a normal order, I have not done for intraday. I told you yesterday we can take normal order for futures. See, like this, you will click and you will buy a normal order, overnight position without additional leverages. But I told you in Zerodha calculator, if you see, you will get up to 3 times to 4 times margin for futures, right? So you need to pay only that exposure money or margin money, rest you will get. So 2500 quantities I had got yesterday. I didn't want to book my 0.3% yesterday because I felt Ambuja was a little bit bullish, the candle was bullish and the day was ending. So what I did, immediately I holded my positions. If I hit 0.3%, close to 45 paisa or 50 paisa was my target. So instead what I did, I holded my position for today, and from 165.30 I booked it to 169.30. so 4 rupees target, you can see. So 4 into 2500 is nothing but 10,000 rupees profit in this particular trade. So you see this 169.30 is the order we executed. So almost I could hit more percentage over there, right? So that it's close to, let's say, 7 for this particular 2500 shares to take. It took margin around 1,05,000 or something it took. Okay, rest money you will get automatically. To buy that lot you need 1,05,000. So 1,05,000 was invested in this one lot. So 10,000 profit is close to 10% profit, right? Instead of booking yesterday 0.3%, somewhere close to, let's say, 1% profit, today I booked overall 10% on my capital. So that's how you can take advantage. Now what I'm trying to say is, for example, you are thinking Ambuja Cement or Reliance or Ambuja Cement is a very good company. Example, okay, I'm not evaluating the stock. Example, this is a good company and you're expecting this company to go up with good deals. In the next 3-4 months, the stock is gonna go, let's say this is 168, right, current price. Let's say the stock is gonna reach 300 rupees with some good news in few months ahead. But you know that okay, in future if I hold, then what will happen? Expiry. We have an expiry in future. So you see, we have an expiry for this future over here. So last Thursday of every month is expiry for equity futures here. So 28th is the expiry, that is, this is May, right? So 2020. So 28th is the expiry where this one will expire. Expire in the sense it will not become zero. You need to take the delivery or give the delivery, because you're paying full money, not like options. You're giving full money, and taking almost. So you need to give for delivery and all that money you should have and all those. So now before expiry we will either book our profit or we will book our losses end of 28th, right? So before 28th, the last minute of the trading day 28th, you can close this position and then you can go to next month position. So it's called rollover. See, now the price is 168.45. You will close the, imagine you are 10,000 profit end of the month. You are expecting the stock to go more upper, maybe 200 rupees, 300 rupees. So what you will do, you will close your positions in May before the 28th ends, the day ends, and then you will take a position. Or maybe you can see traders 1 week before only they will start rolling over from here to here. Okay, so now in this case the price is a little bit high, so there is a little difference, so you will miss this price. So 168.25, here 168.85. so they will close their positions there, and then they will take a new position from here. There will be a small difference or big differences between this and this. So that is what they are losing over there. Or maybe sometimes you can see the future price is less, let's say 167. So this is a discount price. For example, you're buying, this is a discount price for you, okay, 167. So before the expiry closes, they will close this position and they will open a new position. Once this position is coming to expiry at the end of June, Thursday, last Thursday, they will take July futures, which will be running by then. Alright, so this is how they keep rolling over from this to this, from this to this. Yes, a small brokerage, you know, in futures the brokerage is comparatively less, even though if you hold. So the small brokerage will be going to the broker and to the government. So that's a small amount comparatively, you see equity and all that. So brokerage will go, but you know that almost you're booking 10,000, maybe 300 rupees brokerage will go, or 200 rupees brokerage will go. 10,000 you're booked and you're continuing your journey on this stock, because the stock, this equity, Ambuja equity, okay. See, now this stock, if you have taken CNC, you know that it will go from 167 to 300 rupees. But in futures, you are getting extra lot and all that, that advantage. So from this point, you are waiting for next month and next month, so that your price goes up and your profit also goes up. So you can keep rolling over. Or let's say this was profit. For example, it was negative. Your stock was negative 10,000 and you know that the stock has come down. You know after a few months, it's going to correct up. Okay. So now we are holding here. So you will roll over from this to this position, and then after a few months when it comes up, you will book your profit. So the stock, you are rolling over the futures for how much ever days you want. You can keep rolling over. The difference between this, I mean, if you see every future has a difference. So the difference between this you will take. Sometime it will be discount, sometime it will be higher also. So this is one example of how to roll over, basically selling or exiting your position here, and then taking a new, for example, new buy position in the next future. So that is one example how traders roll over their positions in futures. So a lot of people had a doubt, okay, in equity I can hold my position for buy position for how much ever long, but in terms of futures, expiry is just 1 month. So this is how traders take advantage by rolling over from May to June, and later from June to July, July to August, August to September, September to October, November, December. So until and unless they want, they will hold on that stock, considering their calculation that stock is going to go up, go down. So same thing in futures, you can do selling also. So you will do selling, and that's how you take advantage of the market. So this is one example of, for example, this was stock, or let's say you're doing on Nifty, Bank Nifty, future or something like that. So it's up to you how you do it. So I'm just giving an example on this. So hope you got an idea of how this works, rollover works, and how traders take advantage on futures. Many would have not known this concept, so I thought I will share with you. Thank you so much for watching this video. Please do hit that like and subscribe. And yeah, today, Wednesday, Thursday and Friday, I have continuous classes almost from 12 to 9 in the night. So I'll be very busy, so I thought I'll record a quick video for you guys like this. If possible, I'll record tomorrow and day after tomorrow. If I miss out, then Saturday or Sunday. So thank you so much. Stay tuned. See you soon in my next video. Till then, take care. Bye-bye.